Good morning, everyone. Welcome to BodhiBrew, offering advantage through insight. I'm your host, Confidi Kong, Creative Director of Bodhi Research Group. In today's episode, we would like to introduce you to Bodhi Research Group. Our founder and CEO, Dr. Ranjan Bhaduri, and visiting researcher, Pierre-Philippe Ste-Marie, discuss our past projects, industry insights, and the importance of our work. Dr. Bhaduri has over 20 years of experience with manager research, due diligence, portfolio construction, and structuring. He has been invited to speak worldwide on advanced portfolio management techniques. Pierre-Philippe has over 25 years of experience that include leading a bank's trading desk, running a fixed income and credit hedge fund, and being the CIO of a multi-billion-dollar insurance firm. So sit back, relax, and enjoy a cup of brew with us.
Welcome to BodhiBrew. My name is Pierre-Philippe Ste-Marie. I am a visiting researcher with Bodhi Research, and I'm here today with Dr. Ranjan Bhaduri. We will be discussing the Bodhi Research Group.
Welcome to BodhiBrew, everybody. I hope that you enjoy this series, and it reminds me of the famous mathematician Paul Erdős, who once stated, "Mathematicians are a device to change coffee into theorems." And hopefully our BodhiBrew will be the catalyst for many good ideas.
So Ranjan, talk to me about Bodhi Research. What is Bodhi Research?
Bodhi Research Group, we started it in August of 2017, and it does research. We do research and education and alternative investments. On the research side, we have advisory and consulting. And on the education, we have seminars, webinars, symposium, and we also work as an educational partner.
So delve down a little bit into the type of research that we do. Like what are the difference, for example, between the consulting side and the advisory side?
So consulting side is where we're given a project and told what the deliverables are, what the timeline is, what the pay is. And we're typically working with pensions and family offices. I mean, we've had clients from 5 of the 7 continents, so we're very global. And in these consulting projects, it's really the differentiator is that the work is truly customized. And in today's session, I think we're going to talk about the tremendous diversity of these projects.
Mm-hmm.
On the advisory side, we're a complement or extension to one's internal investment or research team. And the idea being that no matter how many good analysts one has, one can always use another good analyst.
Yeah, so for example, on the advisory side, you could hire Bodhi Research for a period of time. Is it fixed or?
The idea with the advisory is we are now part of your team. So it's a monthly retainer that's pre-negotiated based on what the client is looking for, whether we're going to be doing due diligence or due diligence support, sourcing deals, manager research, portfolio diagnostics. It can really be a number of different things. And what we also truly believe in at Bodhi Research Group is we want to be a different kind of corporation, a corporation that stays true to its values. And as such, we don't want a client to be paying for something they don't need or if they don't want it. And so it follows the motto that you're only as good as your last trade, as a trader says.
Yeah.
We're not trading. And with the famous Wayne Gretzky quote, you're only as good as your last shift. We do the same thing with our advisory clients. If at any time they want to stop, they can shoot an email. They only pay to that day. So the commitment is not a long-term commitment, but the idea is that we're going to be there for a long time. And this way we get to really understand the culture, really understand the client's long-term needs and really be part of the team. And in a very cost-effective way, it's essentially the cost of a entry-level analyst or a junior analyst.
And delve a little bit more into the non-conflictual nature of Bodhi Research, because this is something that is really important for you, and it really defines Bodhi Research. You alluded to it a bit earlier, so I'd like you to talk more about this what do you mean by non-conflict?
Yeah, so I also mentioned our values, and our founding values are the following: integrity and ethics, do the right thing always, provide world-class work, so we really are striving for world-class work, fiercely protect the client interests, and provide excellent client service.
Mm-hmm.
So those are the 4 founding principles and founding values that we have. And to that end, especially with the ethics and the integrity, we wanted to stay conflict-free. And so as such, we don't trade. We don't touch or handle the client money.
Mm-hmm.
We're not selling any investment product. We're not doing any commission-based work. We don't do any third-party marketing. And we're not tied to any bank or platform. So now, when you're not doing any of those things, it's truly, it's truly unconflicted.
Truly
and
independent,
there's
unconflicted.
very few consultants that, can say they're not doing any of those 6 things.
So Ranjan, you talked about consulting, advisory. Can you now talk about education, which is the third aspect of Bodhi Research?
Absolutely. Education is critically important to Bodhi Research Group. And we do seminars, webinars. Once a year, we do a symposium, which is a 1-day symposium covering both the public and private markets. And in addition to that,
that's our flagship event.
That's our flagship event. And in addition to that, we're the educational partner for the CASA Annual Conference, which is CASA's flagship event. And we can be doing educational work for other groups in terms of looking at their conference curriculum and suggesting speakers and helping them design the curriculum. So we've done that for exchanges and other groups, banks, and it's a big part. But what we never do on the education side is we're never doing infomercials. We always want there to be substance rich and very beneficial for those delegates that attend. And what's similar about the education with the research is that it's truly customized. So we typically have sponsors, and the sponsors are letting us know what kind of market segment that they'd like to be attending the event and or the session, and we are able to bring those kinds of delegates into the session.
All right. So now let's talk about the type of research we do. I like to think about it in 2 kinds of research. We have the workhorse research, which is research that has been traditionally done by investment, by the investment community for years, like, for example, due diligence and portfolio diagnostics. Can you talk to us about what we do on those fronts and what makes Bodhi Research special about it?
Absolutely. I mean, I like that term workhorse research. And I mean, due diligence is something that I've been doing manager research, due diligence for over 20 years. And this is something that I view it as the 2 biggest enemies to any business are complacency and hubris.
Mm-hmm.
And as such, I'm always trying to set the bar higher, and and even measure myself against myself from the past. And what I would say with regards to due diligence is what's different today for me is that the amount of people that I know globally is very helpful, because in terms of out-of-sample reference checks, so if I'm dealing with a hedge fund manager, I may know who's worked at that hedge fund before or where that portfolio manager has worked, with whom. I may know certain of their clients or groups that may have redeemed from that manager, and that can be very, very helpful. It's a differentiator, and that wasn't true 15 years ago for myself. So, but in terms of the due diligence, we're always putting an experienced team together. We may have interns helping and training them and coaching them, but it's the heavy lifting is done by experienced veterans. And Pierre, you were instrumental in a recent operational due diligence we did for a fixed income manager, because you've traded fixed income and credit, and so you could really go into the weeds. Maybe you could talk a little bit about that.
Yeah, well, I mean, the big differentiator for me for that mandate is that initially our mandate takes 6 to 8 weeks, and the manager asked us to do it in a very short time, in three weeks. I was really grateful to have the team around and help us out. And the experience I brought enabled us also to look at lesser known kind of kinks in the portfolio management, such as the trading system they were using and documenting the trading processes, the investment process, the risk management process. It was so great to be able to be on the other side of the fence and to be coached also by Gunter, by a team of very experienced partners at Bodhi Research. So I had a really great time on that mandate. That was fun.
It was a lot of fun collaborating with you, Pierre, on that. I mean, the pre-trade compliance issues that you are able to identify comes from being a trader, and I know that for you, having been formerly a hedge fund manager and a portfolio manager, you were on the other side of the due diligence before.
Yeah.
So it's
it's really interesting to be on this side.
Yes, no, it is. And our client pension was very, very happy that we could meet their timeline without sacrificing the rigor.
That's right.
And this is, we will always strive and try our best.
We did work really hard.
And yes, it was, we definitely had some coffee helping us.
That's right. Now let's talk about portfolio diagnostics. So Bodhi Research has a pretty unique approach, allowing both top-down and bottom-up, top-down from a portfolio level and bottom-up from the investment manager level. Can you explain to us more, how does Bodhi Research approach portfolio diagnostic and retooling?
Yeah, absolutely. I mean, my background before finance was a PhD mathematician, and as such, I will state that, no one statistical metrics says the whole story. Mm-hmm. So we want to be analyzing with a whole suite of different kinds of statistical tools. And we also want to marry the qualitative with the quantitative. And early in my career, I worked with Warren Wright and George Main. I learned a lot from them. And they were managing a very large market-neutral fund of hedge funds. They were brilliant folks, but neither of them, and they won't mind my saying this, neither of them were quants. Mm. And so that was extremely valuable to me to learn how important the qualitative is and how you want to bring things back to the portfolio and to the trades and not just look at things in terms of pure statistics. That being said, if you're doing good quantitative work, it can give you a tremendous advantage. And so marrying that quantitative with the qualitative, very, very important. Looking at those different statistical metrics, and your experience will let you know, and not only experience in terms of from the quant side, but from the trading side and capital market side, of which kind of metrics to emphasize when.
I know you've done great many of those portfolio diagnostics. I was involved in one last year. And again, that was a very interesting experience from my side, because I am used to look at a portfolio of absolute return manager or any portfolio more in a segregated manner. I was trading bonds, I was trading absolute return strategies. But Bodhi Research approach would look at the overall portfolio of the client, not only the absolute return, not only the overall absolute return portfolio, but the global portfolio, and then look at the place of the absolute return portfolio and how to optimize this portfolio within the global approach. I thought that was really interesting.
No, absolutely. That was a fun project. And it was actually earlier this year. It was
correct.
Yeah,
that's right. We started last year.
But it's
finished this year. That's right.
It was a fun project. We were, and for the audience, we were asked by a very good group to do three things: to give leading best practices in portfolio construction of an absolute return portfolio. Secondly, we were asked to do portfolio diagnostics on the existing absolute return portfolio. And then thirdly, suggest two managers specifically for their absolute return portfolio with that top-down portfolio analysis in mind.
That's right.
And what I will say is that a lot of groups make the mistake of being both over-diversified and under-diversified at the same time in their absolute return portfolio. And what I mean by that, over-diversified in that there may be too many managers, and this gives the illusion of diversification. But in reality, if there's a flight to quality, that correlation can break down and there can be phase locking, meaning the correlations all go to 1, and there isn't diversification when you need it the most.
Mm-hmm.
And
And by phase locking, you mean that there's a track record of return that is uncorrelated with the market during the time where the portfolio doesn't need to perform, and it correlates with the market, meaning it started going down, the returns started going down while the market is going down.
Yeah, essentially, I would probably phrase it as that under ordinary circumstances, these different managers or asset classes could be uncorrelated. And so they seem like they're giving you diversification, but then in a flight to quality, in a crisis situation, all of a sudden they're behaving in a very similar fashion, and they're and not a good fashion.
That's right. Not the fashion you're looking for.
Yes. So that is and on our team, as you well know, we have Dr. Günther Meissner, who literally wrote the book on correlation risk modeling, a book we highly recommend, and all the nuances of correlation, and so we're very well versed in that, and so that's how somebody might be over diversified, too many managers, and that leads to too many fees, and it leads to not enough true diversification in the sense of, and that's where you're under diversified, in that you don't have enough managers that are doing different kinds of things and that can withstand a flight to quality. And in terms of looking at it from convergent and divergent strategies, there typically isn't enough divergent strategies in these absolute return portfolios.
So we covered Bodhi Research top-down approach. Could you please walk us through Bodhi Research bottom-up approach, where you're crisscrossing the planet to find new managers?
Absolutely. I'm glad you asked that question, and we cover so many managers, but it's something that it reminds me of the Somerset Maugham quote. There is no substitute for hard work, and you really have to work hard constantly and consistently in order to make sure that you're doing proper manager coverage and knowing the space really inside out. This is something where it's also similar to house shopping or condo. If you're going to move to buy a house or buy a condo, you're going to see a few different places in the neighborhood before you put in an offer, because you want to be comparing. And in order to assess is something a good value or not, you need to be seeing more than one place. This is similar with managers, that you could have managers, similar strategies, but you need to be comparing, you need to be seeing more, and you need to also be understanding what is that manager's role within your portfolio. And even small nuances of differences within a sub-strategy or strategy can have a profound impact on your portfolio construction. So with regards to manager research, the whole thing is you just have to keep working hard. And we have, a proprietary manager database. We spend a lot of resources and time working on this. And the fact that we are, we have a really good relationships globally with institutional investors and service providers helps, and academic scholars helps us a lot in the manager research as well.
Thank you. Thank you for that. Now, we went through the workhorse research. Let's go through the exciting new type of research that Bodhi Research does. Like, for example, tail hedging, AI, quantum computing. Let's cover a few things that has been done in the past. I've been there for the tail hedging. We have a few mandates we're looking at. Could you provide us an example of one of the topic that is perhaps now more familiar to the world, but that Bodhi Research did before it got popular?
Well, I would say we've done lots of different kinds of customized projects, and this a very large, very well-respected pension came to us once and asked us to do a global survey on absolute return portfolios, and this was very exhaustive in the sense that they wanted, or comprehensive, they wanted the strategies and the asset allocation within the absolute return portfolio, the benchmark, the performance, and even on the accounting side, the resources that were being, allocated towards running this program in terms of personnel and finances. And it was, we interviewed over 33 different pensions and sovereign wealth funds around the world and did a very detailed study on this. In addition, we were asked by a multi-billion-dollar institutional investor to do a survey on risk analytics that would be at the executive level for the CIO or the chief risk officer, and we communicated with 36 different risk experts around the world. And again, this was interviews where we were able to ask a lot of questions, and then we gave our own overlay. And this kind of work, when you're getting to deal with top-notch people, it really helps, right? We're getting to interact with some of the best minds and folks in this business, and that helps a lot. Another example was when a pension came to us, and we went over every single investment in their portfolio across all asset classes, long-only public investments, absolute return, private equity, private credit, infrastructure, real estate, and we did investment due diligence, operational due diligence, and responsible investing. And on this, with the responsible investing, and this group is already one of the leaders in responsible investing, we gave scorecards and we went into details across all their investments. And so this is...
And that was a few years ago, right?
That was in 2020 and 2021.
Okay.
So it was a couple of years ago. I will say that we're constantly getting that opportunity to do interesting kind of work.
So for the remainder of the time, we've got a few minutes left. I'd like to cover... We'll cover other topics during BodhiBrew, right? Like quantum computing and AI. I'd like to cover tail hedging.
Sure. I mean, we'll do a separate session on tail hedging in the future. But
just that as an introduction.
But just to give you a flavor, we recently had a pension, ask us to do a tail risk hedge study, and this was a lot of fun because our team, largely thanks to you, Pierre, it has a lot of firepower in this. I mean, Pierre has made a lot of money in tail risk trading in the late 90s and 2008 and 2020 in different places. And so having that trading experience was very valuable. We also have Günter Meissner on the correlation risk modeling and Dr. Niall Whalen on the scenario analysis. But what we were able to do was interview, again, some of the top groups doing tail risk hedging and really learn some very valuable insights, but then provide our own overlay, which I think is perhaps a game changer with regards to tail risk hedging, and really looking forward to getting to help other groups to utilize this. And every group is different, but this is something that's very, very exciting.
So what was the thing that surprised you the most out of our study?
What surprised me the most was how many groups aren't doing any tail risk hedging or thinking about it at the top of the house and top of mind. And it surprised me that that's the case. And then it also surprised me another subset of these groups, subset of the total groups that we spoke to, are handling things in a very ad hoc way and not at a total portfolio manner. And then, of course, it was a real privilege and pleasure to get to speak to those that have put in a lot of thought and have an action game plan in place.
Yeah, for me, the thing that surprised me the most was the difference between asset and liabilities. I mean, I'm used to deal with tail hedging of assets, but I was surprised to see how many pension plans were thinking about the liability side. And when you think about it, it can be quite powerful to ally the two. We identified different type of risk, one of which was inflation, and maybe we could talk a little bit more about that. But pension plans that have CPI capture within their plan have a different risk profile than pensions that don't. And there are many others, right? Many other differentiators between plan. Like, could you go talk a bit about that?
Absolutely. And this is where every pension is going to have a need customized, a customized solution. But whether the pension is underfunded or has a surplus, whether there's actuarial inflows, if it's a younger pension, or actuarial outflows, if it's a more mature pension, the sophistication internally, the risk, the utility curve, the risk appetite, the board, the sophistication of the board, all of these are very important. And each of these factors will determine the customization, and it can be very, very different. But in terms of the potential for tail risk hedging, when you are dealing with extreme risk and extreme events like this is when fortunes can be made or lost, as we've seen through history.
That's right. So we will cover this topic further in another episode. Thank you very much, Dr. Bhaduri. Thank you, Ranjan, for your time. And we're looking forward to our next BodhiBrew.
Thank you, Pierre. Thank you to the audience, and hope that you'll join us next time on BodhiBrew. Thank you, everybody.